Good morning. It is Tuesday, November the 1st. Taking a look at the morning charts this morning, we've got a pretty big moving market again today, and I think it's going to be a little more exciting. Yesterday, we saw a big move down in the equities market, and this morning we're seeing a continued move down of around the same caliber. So, just looking at the US dollar index chart below, you can see when you get a move up in the dollar, you get a move down in equities prices. So, this blue line here is the SP 500. And the candlestick chart is actually the US dollar index. So when the dollar pulls back, we see equities move up. When the dollar rallies, we see equities move down. So you can see how it's an inverse relationship going forward. Now yesterday on the dollar index, we pretty much saw it jump up in pre-market and it traded sideways for the rest of the trading session. I pointed out in the morning update, if we broke this 76.50 area, which is a key resistance because it's got previous pivot lows. Once it broke below it, it had previous highs. It was going to act as a key resistance level. Once we broke that level, I pointed out we'd probably see very strong continued selling in stocks and commodities. And this morning in trading, we had a nice move up in the US dollar index, traded sideways at that resistance zone for a few hours as it tried to eat through that resistance. And then finally it busted through it and has had a really nice push to the upside. And if you look where it is, it's pretty much right at a key resistance level. So we've got some previous pivot highs and lows, and that's where it's trading right now. It's just broken it right now, but a lot of times you'll see pierces of it, and I wouldn't be surprised if we see a little bit of a pause here, or possibly even a pullback from this resistance zone. But overall, this morning the US dollar has surged to the upside. It's broken through a resistance zone that I pointed out is a pretty key one, and it instantly just jumped right to the next resistance level. So there's some power behind this move, and it's really putting pressure on stocks and commodities this morning. So let's just take a quick look at how commodities are faring with the US dollar index. Here we've got the crude oil chart. It's 4 hours, and you can see along the bottom of the chart, we're zooming back about 6-8 months here. So we got a pretty big picture. The overall trend for crude oil is down. But that being said, we have had more or less a breakout of a previous resistance trend line, and we've broken a previous high. So I do feel as though the trend is trying to shift, and we're trying to put in some type of base here, which we could end up seeing commodities move higher later. But overall, we're seeing the crude oil price dip back down to the breakout level this morning. And it's kind of gone into a little bit of a free fall mode, and it's run a couple pivot lows. So yesterday it broke a low, it broke yesterday's intraday low this morning, and it broke a previous low from last week. So we're seeing prices kind of go into a waterfall price action, which if I zoom in, you can pretty much a waterfall price action. This is a better picture here. Is you see prices start to just kind of fade. They kind of start to roll over, and then they just go straight down, just like water pouring out of a cup. And when you see prices pick up speed and just go straight down, usually you're going to see some type of knee-jerk reaction back up. And that's the same as over here. You see prices start to slide and slide and slide, and then it just goes into more or less free fall mode, and then you get a knee-jerk reaction bounce. So on a smaller time scale, if we were just to zoom in here, you can see it's just starting to do that. It's started to more or less roll over, and it's going into free fall mode. It's coming down into a support zone, these previous highs. I wouldn't be surprised if it comes down a little bit lower. From there, we're going to see how things unfold, and kind of see what kind of news is coming out today, what kind of news came out in pre-market, and kind of gauge what's going on. But I'm actively looking for a position to get involved in the market. Now taking a look at the gold chart. It's a 4-hour chart of gold. Gold yesterday had started to pull back with a jump in the dollar in the morning. So it's no surprise that this morning's jump in the dollar is putting some pressure on gold. More or less gold sold off yesterday, formed a mini bear flag, and continues to sell off this morning. It is coming into a support zone. We do have support across the top here, this kind of breakout level. So that's where gold is trading right now. And I wouldn't be surprised we see it maybe even had a little bit lower, but overall it's down at a support zone. So I think most of the damage for gold is likely done today, but we got to see what kind of news unfolds today and what is really causing this big market movement. Looking at silver, Of course, silver is more volatile than gold and usually does almost the same thing. You can see silver is dropping sharply again this morning. Silver's down about I think it's down about 3%. Overall, silver is coming down into the middle of a support zone, so I wouldn't be surprised if it starts to stabilize here. Now if we take a look at the bond chart, let me just pull, here's the bond chart. This is going to be the safe haven, and overall this is let me just pull up regular futures trading time here. It's not showing pre-market. Bonds should be trading up nicely this morning. Yep. Okay, so here I'll just go to the 4-hour chart. So money is moving out of stocks and we're seeing them move into bonds. Yesterday we saw a nice move up into bonds and bond prices, and this morning we're seeing a continued push to the upside as everybody piles out of stocks in fear, and they're even moving out of the safe havens like gold, and we're actually seeing money move into bonds right now and into the US dollar. So the global uncertainty, everybody wants to be owning US based investments still. So that's kind of what we're seeing. I wanted to see a push up in bonds the last couple of days into resistance here. I didn't really want to see it break above it. I was looking for a possible short. This time it looks as though money could continue to flow into bonds. We're going to see how that goes today, and we'll reanalyze how prices unfold. But overall, money's moving into bonds, out of stocks and commodities, and out of gold, which is important, I think, to kind of note. Now if we take a quick look at the SP 500, the SPY ETF, here is the 10-minute chart, and we've zoomed back about a month, and you can see the price action. We had this kind of running consolidation, and then we saw more or less a breakout to the upside, and now we're starting to come back down. Now the thing to note here is we've got a bunch of gap windows, and you can see as price becomes unstable you start to get gap windows. You got a gap window, gap window, gap window, big gap window here. We had another one yesterday. The thing to note though is this gap window here was eventually filled with this move up. This gap window here was eventually filled with this move down, and this gap window that happened to the upside eventually got filled with this move down. And so the only gap windows not really being filled at this time is this one and this one to the upside. Now I was hoping today we were actually going to see some type of bearish drift up, and I was actually going to be looking to short, as I pointed out in yesterday's update. Unfortunately, we're getting that big gap down that I also pointed out is very likely to happen, and it wouldn't really allow us to short the market because most of the move would already be done. So this morning, the pre-market, we've got the SP 500 trading down here. So we've got a sharp move to the downside, which fills this gap. So this gap here is now filled. So the only one left really to fill is this upper one. So depending how things unfold, we may be looking for an entry point sometime today or this week, and we could see equities eventually try to come back up and test those highs, or at least fill that gap, and from there we'll reanalyze depending how it gets there and how long it takes to get there. We'd either be taking profits or possibly shorting for a larger move to the downside. But overall the picture is just becoming more and more broad. We're getting larger price action. If I just clear this chart and was just to quickly show you the fans here, you know, we've got a broadening formation, and this morning we're seeing equities trade right down to this level. So you can see we're still within this more or less broadening formation, which shows there's uncertainty. There's a battle between the bulls and the bears, and it's just becoming more and more volatile. So we'll see what happens. Usually in a long term this is a bearish pattern, and you usually see some type of breakdown, which is usually going to be fairly strong. So we got to be very cautious here. But right now the market is trading down at this lower support zone, and we may be looking to nibble on a small long position because there's a good probability that there's a huge, keep in mind there's a huge gap window this morning from here to here. So, and there's also this gap window up here. So there's a good possibility that we actually will see some type of move back up to at least fill this major huge gap this morning, and then from there, if we end up getting in down here this morning, we'd be looking to take profits at the top of this window because we could easily see the market continue to go lower. So we're going to reanalyze, and I'll be in touch this morning if we do take a long position. Now looking at the futures chart, just so you can see how the price actions moved in overnight and pre-market this morning. This is the SP 500 10-minute chart, and you can see along the bottom of the chart here we're zoomed out almost a month. So each one of these clumps of volume, that's regular trading hours, which is 9:30 to 9:30 to 4 p.m. Eastern time. So each one of those clumps is a trading session, and just to give you a feel visually, this here would be a regular trading session. So this is what most people see in the day, and then the low volume, that's overnight in pre-market trading. So anyways, this morning in pre-market trading, this is what we're seeing so far. We've seen, yesterday we had a big move to the downside. This morning we're getting continued pressure, really coming down quickly, and there's really strong volume in pre-market. We have broken a key pivot low, and I pointed out yesterday that if we get a really good washout in the market, we could actually see it come down to the 1180 level, which would not only break this key pivot low, but it would break this key pivot low and this key pivot low, and possibly pierce these ones. And of course, the reason why I want to break these pivot lows is simply because if you're to look at the pre-market charts here, when it broke this low right here, there was a spike in price where everybody's stop orders triggered, and I can show you that. But the main thing with trading is you want to see these pivot lows broken because it's running the stops, it's shaking everybody out of the market, and then it'll reverse and bounce. And the big money accumulates when everybody's panicking out at these levels. So that's when the big guys are looking to pick up. So if I just zoom into the price action here, and I just quickly draw a line, this is why futures charts are so important. You really want to see how things are. The price and volume action to me is crucial for analyzing the market here. You can see here, as soon as this pivot low is broken, we had a volume spike, which you can see that red spike. Prices dipped down, everybody's stop orders triggered, and that pretty much washed the market, spooking everybody out. And usually you don't see a bottom right on a pierce. You'll see it start to grind lower and lower, and it'll just continue to do this for a while and really wear the market out. And then that's when you get a knee-jerk reaction back up, recouping most of the move. So that's kind of where we stand this morning and what I'm looking for, and I'm hoping we can maybe nibble on a long position here for a knee-jerk reaction up to fill this morning's gap. Again, we've got a gap if you look at this intraday chart from yesterday's close all the way to here. So there's potential for a 10, 20, 30 point move almost. Depending if we get in at a lower price, there could actually be a 40 point move, which is huge for a 1 or 2 day kind of knee-jerk reaction. So you're looking at anywhere from a 3 to 8% profit in a couple days on one of these moves. Anyways, that's it for this morning, and I'll talk to you in a bit. Bye bye.